Hi, this is the Business Guy. Best investment advice I ever heard. Don't just look at the asset, look at the income that it produces. 100 years ago, gold was selling at $170, and today it's selling for $1,928. Annualized ROI, 2.46%. Income from gold, zero. So if you'd bought $100,000 in gold 100 years ago, today it would be worth $1.1 million. Real estate in America has averaged 4% per year. Let's say you put $100,000 down in real estate. That's a 20% down payment. You bought a $500,000 house. You have interest for 30 years, property tax, insurance, maintenance, and other costs. So we'll calculate it with a 3% expense increase each year. You can rent it out conservatively for $3,500 a month. And we'll also calculate a 3% increase in income each year. Now keep in mind, my grandparents rented a house for $25 a month when they were first married. So long term, these numbers can be staggering. Over the 100 years, that house will have produced $24 million in rental income. So after expenses, that's $22,105,000. Now hold on to your seat. At a 4% increase per year, in 100 years from now, that house will be worth $44 million. Hey, do the math yourself. That house is now producing $685,000 in income annually after expenses. We'll have to adjust for inflation. But to make a profit on the gold, you'll have to sell it and you'll have nothing. The house you still have. So don't just look at the asset, look at the income the asset produces. This is the Business Guy.